Welcome traders to another Tickmill trading update with me, Patrick Munley. Want to update the SP500 view using the emini futures contract and identify some potential high probability action areas and price targets for the trading week ahead. So if we start with the levels that we want to keep in mind as we head into this week, I'm using a weekly bull bear zone at 58.60 to 58.50. Weekly projected range resistance comes in at 60.49. Support comes in at 58.49. The daily volume weighted average price remains bullish at 59.28, and the weekly volume weighted average price also bullish at 57.24. In terms of time framing on the daily, we are one time framing up. That would end on a close below 59.24. Weekly one time framing up at 58.05, and the monthly we're still neutral. We have a gap level back down at 58.06. In terms of last week, per the Goldman Sachs trading desk, positive 5% weekly gain last week. And so we are now up just around 1% year to date. And notably, the index is now 19.5% up from those April lows that we saw on the tariff announcements, and we're just shy of entering a new bull market in terms of the S&P 500. On the data side of things this week, it's a lighter calendar in terms of the macro updates. We've got a lot of Fed speakers, and we have the Global Economic Forum Atlanta Fed Market Conference through Monday and Wednesday, and we still have the Qatar Economic Forum ongoing Tuesday through Thursday. We get some retail earnings out this week, notably Target. Keep an eye on that as a sense check in terms of where the US consumer is. From a technical perspective, like I say, I'm using this 58.50, 58.60 area as the weekly bull bear zone. I'm looking for any pullback into there to act as support. If we move into the intraday hourly time frame, we'll get a better perspective on what it is I'm looking for here. So in terms of the price pattern, what I'm sensing is that we are going to see a potential three-wave corrective sequence set up. So any move today back into that 59.40, 59.50, look for that to act as resistance to set up this move into the 58.60, 58.50 area. Now from there, I'll be watching for bullish reversal patterns to engage on the long side, and we are going to be targeting then a test of that weekly projected range resistance up above the 6,000 level. And from there, certainly I would be watching for bearish reversal patterns there to engage on the short side. And then we'll be targeting move back down to retest these prior cycle highs at the 59.70 area. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.